I want to share with you my top 3 picks of the week and also the 3 stocks that I would avoid at all costs. Well, who am I? My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, before we get into this week's picks, I want to talk about last week's picks. I want to be as transparent as I possibly can, and we're going to look at the 3 that I talked about in last week's video: ABBV, APG, and EDR. So we'll go through each one of those real quick. I'll show you exactly where I would have exited, and we'll do the same for this week's picks as well. So ABBV. So last week we got the buy signal in Outlier on February 4th. Now, looking at February 4th, I want you to look over here at this value. That's our behavioral heat map, right? That's how Outlier works, is it shows you when investors are getting irrationally fearful or greedy, and by how much. So looking at that value, that is an R13 value. So it's in the fear. You can see it's down in the red. That's a fear value of 13. It goes from 0 to 50. So if we go to ABBV, and there it is. We go to ABBV, and then we look at the date we would have got in on February 4th, and we go add February 4th right here. Right? Couple things. Of course, at that time, we didn't have this order block created. So looking at it now, I wouldn't be getting in because it has an order block overhead. Order blocks work as support and resistance lines, and I would not be adding to any position right here. But at the time, of course, we can't see the future. So this is what we had to work with. So for my exit criteria, if the 10 EMA was broken, which it wasn't, that's the blue line. A half ATR from entry, right? That's my stop loss point. I just clicked the wrong button. That's my stop loss point if I were to get in and then it go down. So that didn't happen. I run into order blocks, which there are ones there now, but there weren't at the time. Or the outlier heat map stalls. Let's see, did it stall? So the heat map stalling, meaning that the value no longer increases, right? It's no longer getting more and more greedy. So it went from R13 to 6, G1, G7, G12. So no, I didn't see a heat map stall right there. And so this would be once it's rolled, which we didn't roll any options on that, of course. So then I would look to exit at a profit target up here. So because it was a R13, I would actually exit at a G13. So any R value, this is my personal trading plan. Any R value, I would exit at G13. So that would be at R13, and then R6, and then G1, G7, G12, G17. So February 11th would have been the exit point. So let's put on February 11th right here. All right, a little winner, right? So if we did close to close, about $2, about 1% in the span of a week, I'll take that. I'll take that all day. So that's what I would have done on ABBV. Let's go to the next one, APG. We got the buy signal on February 4th. So APG, oh, I've already got it marked. And got the buy signal on February 4th. Heat map started at G1. Again, start here and then look at this value. G1 means 1 out of 50 on the greed scale. And so for me, I would have got out at a G 10-point spread, so G11. So G1 plus 10 is G11. So that would have gone from G1, G2, G4, G7, G10, G11 was skipped and went straight to G12 on February 11th, right? We didn't quite get the top candle right there. I'm going to move this out of the way for a moment. We didn't quite get the top candle, but we still managed to eke out a profit before it dropped back down. Now, why would I say before it dropped back down? Why do I only give it this much room? Because the behavioral heat map works like a rubber band. The further that it stretches, the more likely it is to snap back. Now, when it gets really deep in the reds or really deep in the greens, I give it only 5 points, right? Not only do I just take off that 10-point spread and move to a 5-point spread there, because I want to make sure that I'm not giving it too much room to snap back, which is exactly what APG did right there. So managed to get that 2 out of 2. Let's go to the next one here. EDR. Now you can see EDR had a giant move since this call right here on February 10th. Let's go to EDR. So February 10th was here, giant move up. So that started at a heat map value of R2, and then it went to G9, and then it went to G21. So as I said earlier, if it starts in the R's, I would exit at G13. So what date would that have been? G21. Now it obviously continued on. And G21 happened on February 11th. Oh, hang on. I must have got the wrong date right there. Signal was February 7th, not February 10th. 7th. There it is. So 1 day prior. And then the exit point came on February 10th at G21 because it skipped right on up to G21, which would be here, February 11th, right? Hang on. This is live, so I'm doing my best here. Yeah, G21. Okay. And then from close to close, that was a 5% gain in the span of basically 2 candles. So not bad at all. We went 3 for 3 on my picks last week, right? This is why you should listen to what we talk about on the OVTLYR channel. 3 for 3. Now, last week, let's go back to the PowerPoint here. Last week's monkey hammers, right? Last week's monkey hammers were Tesla, ELF, and AMD. Let's go visit those real quick. Again, I pushed the wrong button. Let's go visit Tesla, right? Tesla continues to be in a very hard downward stage 4 trend right here. Now, it definitely bounced. Absolutely. From the time that I said I wouldn't take this on to now, it's down a little bit, right? Let's go, I don't know, $5, 1.5%. So for me, this is still one I would avoid. I'm not saying go short this, but I'm saying this is a stage 4 downtrend starting right here. Stage 4 downtrend looks like this, right? This is stage 1 at the bottom where it's consolidating. Stage 2 is your uptrend. Stage 3 is where it's consolidating at the top. Stage 4 is where it starts going down. I mean, you've got your stage 1, stage 2, stage 3. This is the beginning of stage 4 right here. I'm not saying it's going to collapse. And what I'm also saying is I can be wrong. And as a trader, you can be okay with that. It's totally okay to be wrong. Nobody's saying that you have to make the right call that's going to last a million years or even a million days, right? No, if the trend changes, the trend changes. But still, this is one I would avoid. And this is a sell signal that I would have taken in December rather than being all the way out here in February and deciding to sell now. So Tesla, it is starting to recover, but it's still something I would avoid like the plague. Let's go to the next one here, ELF. ELF is one I talked about last week, and I said I would avoid this at all costs. Look at this. This is ugly. This is so ugly. You've got your outlier trend template, the 10 under the 20, price under the 50. This is Shortsville right here. If I were looking to short a stock, this is what I would want to see. This is where my sell signal would have been, right? Your 10, 20, 50 crossed up over here. It went up a little bit. You might have made a couple bucks, but that's your sell signal right there. And then huge drop off right there. So I wouldn't touch ELF no matter what any YouTuber has to say. And then the next one was AMD. And I don't know why so many people are talking about AMD lately. So many YouTubers are talking about how AMD is the best buy of all time right now. I can't disagree anymore. The sell signal, like to sell to cash, was actually way back here in October, right? You had your 10, 20, 50 cross up, and then it crossed back down. And then you might have got faked out right here. Maybe you lost a couple bucks, but from 150 down to 110, right? This is a stock you don't want to be in. This is a classic stage 4 downtrend, and it's very obvious. There's no reason to buy a stock in a downtrend. If you want to buy a stock, I got news for you. Only price pays. And because only price pays, like there's just no reason to buy anything on its way down. So I would avoid AMD as well. So those were last week's. Now let's talk about this week's picks, right? So this week's picks, I pulled, I went into the scanner in OVTLYR. Let me show you what I mean by the scanner, or the screener, I should say. And I put in my criteria. It's not super detailed. It's basically give me signal returns that are positive, greater than 1 million shares average daily volume, current buy signals, price change less than 5% in the last few days, because I want to make sure I get in before the OVTLYR move happens. Not maxed out on the greed scale, over $20 because I'm a snob and I like expensive stocks that are moving up with the uptrend indicator in line. The uptrend indicator is this green or red background. Where is it at? A green background right here is an uptrend. So I ran the screener and I came up with 3 names. So first was BXSL, right? This one right here. It's got some room to run. It's running up into earnings. You've got your 10, 20, 50 outlier trend template showing it's in a bullish trend, but running into earnings is something I love to do. I love to trade up into earnings. Now, I just saw something earlier. Let me see if I can find it real quick. The trade desk. This is why I don't hold into earnings if I can avoid it. If I already have a giant profit cushion, I'm very interested, but something like this can absolutely happen, right? And even though it had a beautiful uptrend for a long time, the uptrend told you when it was changing, right? And the 10, 20, 50 crossed down and it was then a bearish trend. and then it got absolutely dominatedly monkey hammered down. So that's one I would avoid at all costs, the trade desk. But let's go back to stock picks for the week. So BXSL, again, looks really sharp. I love to trade up into earnings, but if you are going to trade up into earnings, just be careful. It closed right on top of this order block. So when the market opens here in a little bit, I'm recording this Friday morning, but when the market opens up here in a little bit, this order block will go away. And that's a very bullish sign to break through order block. So I like BXSL. Next, ENB. I wouldn't trade this one because it's inside this order block here, even though it came through on the scanner. Or it's just not one that I would trade because of these order blocks. In XPI, I could get on with this one, but I have some reservations. First, it's in a downtrend right here that's starting to reverse. You got your 10, 20, 50 crossing back up. You do have some overhead order blocks. They're about almost 4% away. But this is one, even though it does technically match, it just does it doesn't give me warms and fuzzies. It doesn't give me warms and fuzzies, right? I want to see a stock that's moving up and moving higher versus a stock that's been moving down and is now starting to move higher, right? I don't know where that's going to go, but for me, that's not one I would trade. Look at tech again, right? You're in a downtrend that's starting to reverse. You got your 10, 20, 50 crossed back up now, running up into earnings. So that one could be good as well. But of course, earnings are very risky. AIG has itself within an order block right here. I wouldn't trade that. You've got FULT, again, order block, not even $1 away, so I wouldn't be interested in that. And then we've got AMSC. So it's got $2 to run on that order block. But basically what I'm telling you is, I thought I'd have 3, but I only have 1. Now, that's not surprising to me, and I'll share with you why. Because the market, if we take a look from a holistic perspective, the market, while it is really close to setting new all-time highs, if it didn't already set a new all-time high right here, has been basically going sideways for 2 months, right? I know it feels like a lot's happened, but really the market has dropped sideways for 2 months. But we got worse than that. We have market breadth that has been just absolutely evaporating. What is market breadth? Market breadth is how many stocks have buy signals, right? And those buy signals are going to basically push the market itself up. So let's look at some investor psychology behind this, right? The more people with buy signals, the more buy signals get generated, the more the market goes up because the prices are going up, right? But we're getting the opposite. We're getting more sell signals. More sell signals, selling begets selling, buying begets buying, right? And so the sell signals are starting to increase inside of OVTLYR. And because the sell signals have been increasing for so long, I've been in cash, and I'm going to continue to be in cash. And even though I thought I'd have 3 picks free this week, I only have 1. And I'm not really surprised because not only is the market bearish, but every single sector has the same issue here. Breadth is waning everywhere you look. So not super hot on the market at all right now. But we could look at some monkey hammers for this week, right? We could look at some that I would absolutely stay away from no matter what. I'm not ready to go short, not until the market starts trending down. When the market starts trending down and the breadth is trending down, you're going to have the alignment right there that you're looking for. We actually got a sell signal on the SPY. In fact, right here at this all-time high, we got a sell signal. So with the market getting a sell signal, with the market breadth coming out, I'm not bullish on this market at all right now. Not at all. But I'm not ready to start shorting. And I don't think you should either, because the market is still trending higher, right? The market can remain irrational longer than you can stay solvent. So let's look at 3 names. Let me see if I wrote the names down. No, I didn't, but that's okay. I have some in mind here on my bear list. So first one I would avoid is CELH. I would not buy CELH with your money. Look at this horrible trend, right? Look at this horrible trend. And yeah, it's had a couple days of coming back up, right? It's had a little bit of momentum right here, but this trend is awful and ugly and is not where I would put my money at all whatsoever. Again, Tesla continues to look really weak to me. Could it come back? Maybe, but the sell signal was all the way back in December. This is not something I would be interested in holding at all right now. AMD continues to suck. Elf Beauty continues to suck. Let's look at Estee Lauder, another stock that's being pushed by certain YouTubers. I don't know why anybody would be interested in this stock. I mean, let's legitimately look at this, right? I don't know why anybody in the world would be interested in buying Estee Lauder company. Let's go to a monthly chart. I mean, look at this. Who wants to own a stock that literally looks like it's pointing to Mexico, right? Pointing to the Gulf of America. Like, this looks awful. No, thank you, right? Let's compare that to a stock that is working, like HIMS. HIMS has been on a run lately. That's what you want to see. That's what you want to see. If you are a shareholder in anything, the only way you make money is if price is going up. And that is what price going up looks like. Holy cow. Which we actually got a tremendous buy signal on HIMS inside of OVTLYR. I couldn't believe it. Hang on, let me find dashboard real quick. Okay. So I was doing this in yesterday's live stream, and I was like, good gravy. I cannot believe how strong of a trend that is. So let me zoom into, we'll do the 6-month point. And you can see we got this buy signal back on November 26th, which I marked on the chart right here, November 26th. It did struggle. I did mark on the chart where I would have gotten out based on my heat maps that we told you earlier. About a 5% gain on the stock. I'll gladly take a 5% gain. But then it turned around, and there was a second entry point right here where the moving averages crossed back up, and then rocket ships, 94% higher since this buy signal. I mean, crazy talk right there. Now, it is maxing out basically, or it's really close to maxing out the greed value. It's a G44 at the time, today, G44 today, and there's a max value of 50. So I could absolutely see that coming into a wall really soon. But then again, you never know. When a stock is trending like this, let the trend run. Don't be scared. Let the trend run. And then another one I would avoid, it would be Soundhound. I mean, you've got your 10, 20, 50 cross down. You've got order blocks on both sides, but it's going to open up 22% down this morning. You've got 22% down. You could have avoided that, right? If you followed the 10 moving average, the blue line, right? You could have got in, you could have got out, right? Sometimes you win a couple bucks, sometimes you lose a couple bucks. We're not trying to be perfect here. And then you can watch it run huge. The first time it closes under the 10 EMA, it's right there, right? That's your exit signal. That's my exit signal. And then what happened? Immediately after that, good night, right? Immediately after that, down 35%. It bounced up a little bit, and now it's going to bounce down again another 20% down to 11, looks like 1180. See about right there. Another 20% down move this morning. So one thing I also wanted to cover is do expect rallies. Do expect rallies on bearish stocks, right? And so this article I pulled up made some good points here. Why do the biggest rallies happen in bear markets? And we're not in a bear market yet, but a lot of these stocks are in horrible bear markets themselves, right? Like Tesla, AMD, Celsius, Elf Beauty, Estee Lauder. Nike's not that bad. But it's still in a downward trend right now. The Trade Desk got absolutely dominated, monkey hammered to death, and then SoundCloud, right? All of these are within their own bear markets. Big stock market index moves to the upside are caused by uncertainty, fear of missing out, and low liquidity in most cases. So there's going to be people who are jumping in because they see it's a value, and it's going to boost the stock price for a couple days. But if the trend is down, until that trend starts to bend, it can really take it down. It takes a lot of emotional buying combined with a little holding conviction to get a big move to the upside. Two-sided volatility is not bullish. And a rally on the downtrend, it doesn't mean a new uptrend has begun. I've seen a lot of comments that are saying like, oh, Tesla is up 10% since you made that. First off, it's not up 10% since I made that. The sell signal came in December. Yes, it is moving up right now. But keep in mind, there's a lot of people jumping in, trying to get that fear of missing out. But as the trend moves down, be careful. Be really careful. AMD did the same thing, my friends. AMD had all these little rallies inside of this trend, right? What you want to look for if you're going short or if you're going long. If you're going short, looking for lower lows and lower highs, which is exactly what you see right here, right? In fact, let me draw on the chart. I'll show you what I mean. So lower lows, did I do it right? Lower lows, higher highs, right? Lower lows, lower highs. Sorry, I did mess that up. Lower lows, lower highs. A, B, C, D, all the way down. That is what a bearish trend looks like. So just be wary of that whenever you're trading any stock out there, right? So for this week, the 3 I would avoid are Celsius. Wouldn't touch Celsius with your money. I would avoid not Estee Lauder, Elf. Oh my gosh, I couldn't imagine Elf right now. That is so nasty. And then lastly, the Trade Desk. Man, that stock, like, it told you it was going down, and then it just got absolutely monkey hammered. Now it's sitting on a couple of order blocks right here, so it might catch a bounce down here. But this is what it's like whenever you trade with the trends, right? The trends will tell you which way the market's going. So be sure to tell me in the chat, and remember that only price pays. And of course, come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch them, and I recommend you have a fantastic day. We'll talk soon.